Hi trader, this is Chris from Elite Currency with a part 2 on the webinar of earlier today. I had some sound problems, apologies for that, so I wanted to repeat the message with clarity so that you know what the view was on the markets from my side at least. Before we dive into that though, be aware of this disclaimer. It explains that trading for exchange and global financial markets is considered high risk, may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar and video and recording is for educational and informational purposes only. And by continuing watching with this recording, you agree with this disclaimer and you're also aware of the risk involved when trading. All right, thank you so much for your attention on that. As I was saying in the webinar, but unfortunately not all of that came across in that webinar, that the euro dollar is making a downside, but the volatility definitely more predominant than a very strong bearish downside here on the euro dollar. Looking at yesterday's not NFP day, I mean interest rate decision day, excuse me, we could have expected a lot more downside considering, of course, the rate hike from lower levels to 0.5 perhaps. So we didn't get that. We did see some downside, but after a large up and down. Right, so I think the volatility here more predominant really than the downside here. You can see the volatility ultimately, if we look at the daily candle here, you can see that price is nowhere near that bottom of 104.50, and it's not like it's challenging it, and has not broken below it. For instance, if I would have seen a candle as big as this bullish candle to the downside, obviously then you're looking at very strong bearish momentum that could potentially break through it, already has broken through that bottom, and the downtrend, the bigger downtrend of this weekly chart could take place. Now that has not happened. As you can see here, we're only challenging last week's low at the very minimum. And if we would have had something like this instead yesterday, right, that would have been different, or even like this, perhaps, right? Massive momentum. Clear signal that the downtrend is continuing. We didn't get that. We got a small day, considering the interest rate and the importance of that. That's a bit disappointing, really, for the dollar strength. So maybe the dollar is showing a bit of signs that it's overbought, and it's not going to continue with that downtrend. I don't think it's going to happen. If it didn't happen yesterday, then I don't think it's going to happen in the remainder of the year. We got holiday season coming up, so it's probably going to be a bit slower in the market. And obviously, and from that point of view, I don't think it's going to happen this year. I think it's going to probably correct a bit longer, and maybe later next year, or right when it's consolidated a bit longer, and we get maybe a triangle like that going on, then I think the market could make that break, and the dollar could strengthen. So I do expect the dollar strength to happen. It's just not now. I do think that it has a pretty good chance somewhere next year. My guesstimate is March, April. For the downside break and the downtrend continuation down to parity, at least probably below parity, down somewhere between 0.9 and parity, I think. And that is my guesstimate here, just looking at momentum and the price action. All right, so I was telling actually in the live webinar, I'm not sure if anyone heard it, that this is a consolidation box, and that if that breaks, price could fall, and it's doing that right. Those technical patterns are sometimes very useful. The target should be roughly at the 50 fib. Because the 38.2 fib has already been taken out. So I think that the next support level will be at 107.50, which is the 50 fib. And this could turn out to be maybe a bigger correction like that. That's what I'm expecting for the moment, though, at least. So let's see if price bounces at the 50 fib and then how it responds when it gets back into resistance. Obviously, what you could have here is around 108.75, kind of a resistance zone there. All right, so this is what I'm expecting, down and up, and then let's see, it could go into a sideways move as price reaches the holiday season and the end of the year. Now the pound USD, I said, was good shorts upon these breaks here, but now it's getting pretty close to the bottom of this downtrend channel. It's obviously in the downtrend. It's a beautiful downtrend. We've made a hook back here, and I talked about the potential for downside in the live Ad One Markets webinar as well, and that turned out to be true. And we're back at the bottom now. Will price bounce off this bottom, or will it break? That's going to be an important question, because if it breaks, we could see momentum follow through to retest the bottom. If it bounces, obviously, it could go back into the resistance zone, probably around here at about 150, 151. So that's going to be an important level, for price reaction here on a daily and 4-hour chart to monitor which of those two is more likely. Furthermore, I was talking about this Aussie that I shorted upon the break here, and I closed about 71.30, closing about 65 pips for a short. That was a good trade earlier today based on the downtrend momentum that was present here. Hook back and continue. Classical continuation trade right there. Dollar yen did the same, kind of struggling here, so not much going on there. And I think that from the long-term perspective, this is still in a triangle, and therefore not that interesting currency pair at the moment. So this was basically what I was discussing in the live webinar, and I wanted to give you a recap of that. I thought it was a pity to just to leave it hanging there in online. So that's that. And I think that from one more important thing though, from a long-term perspective, of course, dollars still looking strong, just maybe not right now, I would say, as a summary. Another great thing I wanted to mention is the fact that Admiral Markets, of course, is a great broker, has won the UK Forex Award of this year, Best MT4 Broker. And if you open an account with Admiral Markets via the link of Elite Currency, which is indicated here in blue, you'll get a moving average course for free. It's valued at 890 euros. That's yours if you join Admiral Markets through us. Plus, an ongoing 10 euro credit for Elite Currency. All of the indicators, systems, courses, you'll get 10 euro credit for every 1.5 lots traded. So there are two great advantages of trading with Admiral Markets through us. Of course, Admiral Markets are already offering a tremendous advantage in the sense of customer care, the analysis, and technology with the MT4 Supreme Edition, 60 great extra features that it offers. On top of that, we're going to give you educational for free plus credit to buy more education. So I think that it's a great opportunity, a win-win for all of us here. The only thing you need to do, by the way, is open an account, a live account, fund it within 3 months, and then trade once in those 3 months. All right, that's the only condition there. Also, we got a Harp Special going on, by the way. Of course, as you probably know, Nennet and I trading Harp very intensively, getting great results. And we're getting questions like, well, I know that you're doing great, but can I do that too? And of course, we cannot guarantee that. But what we can say is that it's a very duplicable system. It's very straightforward, has clear rules. And we do think that the chances is very decent, good, and high that traders are able to duplicate that success. And here's an example. Bob has been trading with us for the last couple of months, 8 to 10 weeks now. And he sent us a testimonial that we wanted to share with you. He found it very easy to use, reliable, and robust. He had 53 trades so far, 43 wins, which is an 81% success rate. And obviously, he's very happy and has made Harp his favorite trading strategy. So I wanted to share a story with you from a trader that it's indeed not so, of course, great that we're doing well, but maybe even more importantly, that traders who just started with Harp are doing well, as you can see. So if you're interested in Harp, don't miss out on a 1,500 euro discount up to January the 4th. If you're interested in Harp, this is the time to grab it, I would say. A 1,500 euro discount is not something you want to miss out on. So if you're interested in that, voucher is December special. That's how you can get that massive discount there. And it, of course, will allow you to it avoids you losing a lot of money there and down the road if you want it later on. So 1,500 euro discount is a great way to not to miss that loss there. And so December special, just use those links at the bottom and you can get access to that. And that's valid to January 4th. Thank you so much for joining today, and wanted to wish you happy holiday season, good trading, and we'll see you soon. Cheers.